Good morning. We will pay attention to balance sheet accounts today. There are three different types of balance sheet accounts. First of all, we have asset accounts, that is non-current assets and current assets that belong to the business and that will cause an inflow of money in the future. Then we have liability accounts, is money that the business owes to banks or creditors that will cause an outflow of money in the future. And then we have equity accounts that belongs to the owner, and that is the money that he contributed to the business capital, and if he takes anything from the business, the drawings account. Why do you transfer the balances in the balance sheet section of the trial balance to the following financial year? The balances in the asset accounts are transferred to the next financial year because the assets belong to the business and will be used in the future. So the assets don't disappear at the end of the year. We carry it over from one year to the next year until we don't use it anymore. The balance of the liability accounts are transferred to the next financial year because the amounts are still owed and will be paid in the future. So at the end of the financial year, your liabilities will not disappear. You are still obligated to pay these liabilities in the next financial year. The capital account is transferred to the next financial year because that is the money that the owner invested in the business, and that indicates the own capital of the business and the capital that the business will start with at the beginning of the next financial year. Give an example of non-current assets. Non-current assets are assets that belong to the business that will be used for a long period and the value will not change within the next 12 months. For example, fixed deposits that we have in financial institutions like banks, and the purpose of a fixed deposit is to earn interest so that the profit of the business can be increased. Investment in shares in another company to earn dividends so that the profit of the business can increase. Dividends is the share in the profits of that other company that you invested money in. Give 5 examples of current assets. Current assets are things that belong to the business but will change on a regular basis within the next 12 months. For instance, the bank, your current bank account is your checkbook account. Petty cash is money that you have available to make small payments in the cash business. Cash float is the cash that's in the till so that you have change to give to your clients. Debtors control is the money that clients owe to the business because the business sold goods to them on credit. Inventory is goods that the business purchased with the purpose of selling it to make a profit for the business. If any of these goods are still available at the end of the financial year, it is an asset to the business. Non-current liabilities are liabilities that will be paid in the future, more than 12 months in the future, so it will not be paid within the next 12 months. A mortgage loan is paid back over a period of 20 to 30 years, and you normally have to give property as security to obtain this loan. The loan that you get to buy a car or a machinery or vehicles will be paid back for more than a year. A car, for instance, the loan will be paid back within 54 months. A current liability is a responsibility of the business to pay back money within the next 12 months. That is creditors control, because the business bought goods on credit from their creditors and they will have to pay them within the next 12 months. A bank overdraft is money that the business owes to the bank because they wrote out more checks than they deposited into the bank, so they owe money to the bank. Give 2 examples of equity accounts. The capital account is the money that was contributed by the owner as his capital contribution. So that is his interest in the business. That is the money that he can lose if this business goes insolvent. Or you can say that is the amount of money that the business owes the owner. The drawings account is used to record any entries for money, goods, or assets that the owner took from the business for his personal use.